Hello everyone, welcome to the Elliott Wave YouTube channel. Today is September the 10th, and the chart of the day for today's 10-year notes. This is CN, and right here, what we have here is a rally, which is unfolding as an impulsive structure in the 60 minutes time frame. Now, of course, we always need to know the context in the bigger time frame instead of just looking at one specific time frame in the lower time frame. In this case, in the 1 hour, right? So as you can see here, we are finishing with 5, which is the last wave, right? And within with 5, we are subdividing into a another 5 waves, 1 2 3 4 5. So expect a bit more upside in 5 waves in the smaller degree, and once we finish the 5 waves up in blue, that should be finishing 5 in black, and then we should be getting a little bit bigger pullback again after the 5 waves, right? But let's zoom out, and which is more interesting than the 1 hour, to get some ideas about the higher time frame. So if we take a look at the weekly, now 10-year notes has been in a bullish market for 30 years, but only recently, starting from 2020, right? You can see it continues to make a new high all the time since forever, 1982, right? And we have started to reverse massively, right? Now, this pullback is in a 5 waves from the peak, and therefore the trend has finally changed. The 30 years trend has been broken finally, right? It's amazing, 30 years, but it's reversed. So now we are looking to do a correction against this 5 waves down here, right? And as you know, the correction will be in the form of 3 swing or in 7 swing, right? It's always going to be like that. Now you can see in the rally that started from 2023, it is currently showing a higher high, right? So it's been lower low, lower low, lower high since 2020, but then it's starting from 2023, we finally got a higher high here. But it's because if the rally is always going to be in 3 swing or 7 swing within a market that already turns bearish. So that means we are now already a 3 swings up and already reaching the 100% extension area here. Now, of course, if you think about it, I think because we are correcting this entire decline here, this correction is still considered to be kind of shallow because you are correcting such a massive decline from 2020 to 2023, 3 years decline. And the size of it, I think, is still considered to be rather shallow to correct this entire decline. So if you look at the retracement, we are barely above 23.6, right? So that means we might potentially still in the next weeks and months to come, unless it's a very shallow correction, right, which is rare, but it can happen. Unless it is a very shallow correction, then potentially this can extend. Now that means we have 2 options in terms of how it will extend to correct this decline. The first option is simply that, assuming we will have more upside, right? That's the assumption, which is not always the case, but that's the assumption. The first option is that this entire move is in a 5 waves, 1 2, and then this could be like 3 4 5, and this 5 waves is going to be ending, let's call it an A, and then you got a B, and then you got a C, and then it fails because the 5 waves down, right? So it's a bigger A, B, C, correcting this entire decline, and then it fails, right? So that's one option, which is possible, right? Now the second option is that this rally is in the form of a WXY. So you can think of this as not 1 2 3, but you can think of an ABC, but the ABC, right, because it's still a little bit too shallow, the ABC is only ending the W. So you're gonna get a big X. You're gonna get a big X correcting this entire 3 waves, and then you will have another 3 waves up because again it's still a little bit too shallow. So you got another 3 waves up like this, to finish the Y, then it won't be too shallow anymore then, because you're correcting this entire decline, and then you have a pretty decent correction in what we call a 7 swing, right? 1, 2, 3. Like I said, correction is always 3 swing or 7 swing. Now after this it fails. So those are the two options, guys. And then the third option, which is I would consider a little bit less likely, is that we finish the entire correction of these 5 waves in just a shallow correction 3 waves, and we just go down directly here. That's the other option, right? So then what can we expect to happen in the 10-year notes? I tend to think that unless this is a 5 ways up, which again, if it is a 5 ways up from the lows, this is wave 3 even, then the wave 3 can actually go to 1.618, because that's definition wave 3, the strongest wave. Now unless it is a 1, 2, 3, 4, 5, I tend to think this area, which is where we are, approximately 115 to 120, should produce at least a decent 3-ways pullback at the least, right? I mean, it can even go to new low, but at the least should be producing some sort of 3-ways pullback. Now in our count, we're calling this 1, 2, 3, 4, 5, right? But that is still part of the 5 ways from here. So this is like a 1, 2, and then 3, 4, and we can continue to extend higher. Now the blue box, remember, is on the area and the inflection zones, I would say, is between 115 to 120. That's not a really a small range. It's a pretty decent big range. So I'm not saying it will have to finish exactly 115. Nobody knows the exact level for sure, but this is the area, this is the range, the inflection zones, where I think most likely we're gonna get at the least some sort of reactive correction, like a 3-ways correction of some sort, can be seen from this area. Okay, and even though in the shorter cycle we might still see extension higher like what we're showing, but in the large time frame, is this inflection zone is what is more interesting. I think chasing this can get risky, to be honest, because I am expecting most likely we're gonna get some sort of reaction lower from this area, right? Rather than, okay, we can need to go. Now it could still extend higher, yes, to 117, 116, 118, who knows the exact level, but this area between 115, 120, most likely is going to get again a 3-ways pullback. Okay, so that's what we are looking at right now. Currently 10-year notes might still see extension higher a little bit more, right? But it has already entered the inflection zone, so that's I think the risk is actually going to get a pullback, a pretty decent pullback sooner rather than later, instead of continuing to extend to the upside. Okay, so that is the update here, guys, and as always, if you want to get more updates on 10-year on the notes or in Forex, commodities, indices, stocks, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So see you all again next time, and have a nice day, everyone.